Hi everybody and welcome to this London session update on Friday the 3rd of May 2013 as we lead up to the US non-farm payrolls report at 1:30 London time. Well, the market's been as usual quite quiet before this big announcement. We have seen dollar yen actually make some gains. Now I mentioned dollar yen because for those of you who trade payrolls, they'll know that is considered one of the most sensitive FX crosses around the payrolls report because it's so sensitive to movement in treasury yields. In fact, let's take a look at the chart here. As you can see, dollar yen has drifted higher. It had been as low as 97.05 yesterday, but it now is back above 98. So it's moved higher, but really, in fairness, gains have been fairly limited. We're still away from that 100 level. There was a big bearish engulfing weekly candle pattern last week, which suggests that 100, or just reinforces the fact that 100 is a massive level of resistance. Well, payrolls is a key driver of this, but there are a few reasons that are keeping us cautious unless we get a very strong payrolls number. Now, as you can see in this chart, this shows dollar yen and also the spread between US and Japanese 10-year government bond yields. So the spread has been decidedly dollar yen negative. Now, with US Treasury yields, 10-year Treasury yields, back down at kind of below 1.65%, it's going to be very hard for the dollar to stage a rally. So that's what's causing us a bit of concern. Now, what could potentially change the outlook for treasuries? Well, it would be whether or not QE might come to an end, but we think we'd need a really stellar payrolls number today, something in the region of 200k plus, to turn treasury yields around, maybe get them to jump to the 1.8, 1.9 zone that could really get us above dollar yen. So on the downside, some levels of support to note include 96.95 and then 96.10, which is the 50-day moving average. And then on the upside, obviously 100, a massive level, psychological level. But then above there, remember 100.20, that is the top of the monthly Ichimoku cloud. So if we get above there, then it opens the way to 101.50, which is just the top of the uptrend that we're in currently. Now, obviously, we had the ECB yesterday. They cut rates, but it was a volatile day for the euro with the threat of negative interest rates being applied, maybe being touted by Mario Draghi, the ECB president. So what's euro done today? This is the daily chart. As you can see, we held support really nicely at 130.30. So that's kind of the bottom of that recovery uptrend that we've seen. So support there. And we have bounced higher today, so above 131 as we lead up to payrolls. What does this necessarily mean? Well, there is a bit of selling going on dollar selling going on as we lead up to payrolls, which could mean that a strong payrolls number could see euro dollar really fall sharply. So we've got a few levels to note. 130.10, that is the 50-day moving average, which acted as very nice support there. A lot of buying interest above there yesterday. But if we do retest below there today, will they come in as strongly? Well, maybe not if we get such a strong payrolls number. And then below there, 129 between 60 and 70, that's a 200-day moving average. So 129, 60 and 70 on the back of a very strong payrolls number. If we get below there, very bearish development for euro dollar. But right now, again, gains have been tapped. We're in that range. 132.10 is tapping, is still capped the medium term top in euro dollar, and it will depend on payrolls. So strong payrolls number, remember, very dollar positive, but something around consensus or below consensus could really keep the dollar bulls thwarted for some time. But overall, good luck trading during this very important announcement, and please do join us next week for more. Thank you.